This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging markets were lifted from a near 4-month low today on growing hopes of more stimulus for China's slowing economy. Now, the latest round of tit-for-tat trade restrictions by Washington and Beijing has certainly knocked nearly 6% off the MSCI's Developing World Stock Index. On the continent, South Africa's JSE saw appetite for risk improve along with other emerging markets, though it was down today. Market heavyweight Naspers gained about 1.79% on the day. Meanwhile, Egypt's EGX 30 saw a third day of losses despite news that the finance ministry has now cancelled a planned increase on a tax on stock exchange transactions. Well, here's a look at what else is coming up on the show today. Zimbabwe's energy minister gets fired as a power crisis persists. State-owned enterprises in South Africa on the spot in a fresh government push against corruption. And Germany returns to growth, but its economic outlook is threatened by the China-US trade tensions. Well, let's start off the show in Zimbabwe, where President Emmerson Mnangagwa has demoted the country's energy and power development minister amidst worsening power and fuel shortages, which of course have seen many in the suburbs without power for up to 8 hours a day. Now, earlier this week, Zimbabwe's state power utility imposed the worst blackouts in nearly 3 years due to low water levels at its Kariba Dam power plant. Here's CGTN's Farai Mwakutuya with the details.
These workers are racing against time to deliver their orders before the next power cut. Until recently, this packaging plant operated around the clock, but lengthy blackouts have wrecked that schedule.
Our normal production hours are 186 a week, and we've had to cut down to 120, which means we are losing about 1.5 days worth of production in a week. The lifestyle for our staff has been disrupted, and we are incurring costs to do with transporting them at home midnight because unfortunately the load shedding is happening during productive hours, which means that they have to work during the night so that we can accommodate the schedules, the load shedding schedules.
That will push up production costs and strain margins in a price-sensitive market. The renewed electricity woes come on the back of a poor rainfall season, which has lowered Kariba Dam levels, where power generation has had to be halved. Coal-fired plants are aged, and there's no other viable alternative source of energy to bridge a deficit of about 1,000 megawatts per day. That means Zimbabwe will need to increase its imports from neighboring countries. A severe shortage of foreign currency may throw spanners in that plan unless tariffs that have been rendered sub-economic by soaring forex rates are raised.
In US dollars, the tariff is now too low. There's a need to adjust that tariff so that the power utility is able to import power and distribute it at least at par, if not for a margin. But what is important is that as they raise these tariffs, they must not be raised above the level which will help local companies to be competitive.
While an increase could restore productive capacity for hamstrung factories, it won't go down well with citizens already grappling with rising inflation and shortages of fuel, bread, and other commodities. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
Now, of course, today saw the release of Zimbabwe's medium-term finance review, and Finance Minister Mthuli Ncube announced the rebasing of the economy after adopting a new currency. Now, Ncube also said the economy had grown more than expected in 2018, but will be weighed down this year after that drought and, of course, the cyclone. Well, let's get the latest on that review from Farai Mwakutuya. He joins us now in Harare. Farai, welcome to the show. Now, give us the highlights of course, that much awaited midterm finance review. What did the finance minister have to say today?
Well, Uche, good to see you, and indeed eagerly awaited a presentation by the finance minister. It ran way past the normal sitting hours of Parliament, ending just a short while ago, under an hour ago. And I think the finance minister was very sober in his assessment of the situation, acknowledging that the economy is facing a number of challenges. He says that growth will be below 5%, which is lower than had initially been projected. And that is because of those challenges of the drought, the low rainfall, but also the impact of Cyclone Idai. He spoke about the fact that, the country continues to face challenges in terms of shortages of fuel and foreign currency, but now also this renewed challenge of electricity, which, has had power generation has been cut significantly. That will have a bearing on the agricultural season. It will have a bearing on the manufacturing and mining sectors, and ultimately impact the economic growth projections of this country. So clearly some challenges there. He says that, the food situation is something that people are watching very closely. He says that the local grain marketing board has 7 months cover in terms of grain that is available. So certainly some good news there. Perhaps not as much as people would like, but certainly more than it's not an emergency situation. Government expenditure remains high at 69.4%. Employment costs still constitute the highest amount of government expenditure. However, on the plus side, revenue collection has been enhanced significantly. 97% of government revenue is being generated through tax. So the challenge remains lowering government expenditure. The revenue side is doing well, but lowering expenditure. But Uche, I think I just want to point out the fact that, people were expecting a lot from this presentation. I think more tangible solutions in terms of dealing with the challenges that are being faced. What's the plan with fuel? What's the plan with electricity? The minister said that government is committed to addressing those, but didn't go into specifics. And I think that's what many people were expecting from him today.
Well, Farai, I'm curious to know whether this review did provide any hope for analysts and for the Zimbabwean people, because the reality is right now the country is in the midst of the worst economic crisis since 2008. Inflation once more spiraling upward, of course, in the face of shortages of food, fuel, as well as foreign currency shortages. So does this review provide any hope going forward?
Well, Uche, as I said, I think people were looking for tangibles, and they weren't there. But the finance minister remains upbeat that the measures, the reforms that are being undertaken, the austerity program will start to bear fruit. And he says in the latter part of this year, in the final quarter of 2019, we'll start to see some of those results. He remains bullish about lowering the rate of inflation. He has projected that it will come down beginning October 2019. And I think analysts agree with him because the rate of inflation, year-on-year inflation, will start to lower because the sharp rise in inflation began in October 2018. And so in terms of the base level at which inflation, year-on-year inflation will be measured, will be much higher in October 2019. And so clearly the rate of inflation will be lower. However, I think the shock that many people will have is that when they hear inflation going down, they expect that the prices of goods and services will also start to come down. But that sadly is not the reality. Many Zimbabweans are facing challenges, soaring costs of living. The parallel market rate continues to run, and that is eroding people's incomes, eroding their buying power. And that is the harsh reality that many people face. And I think they are looking for some sort of quick solution, quick resolution to this. They hear government, they hear the finance minister saying that the measures will start to pay off. But I think for many people it is taking too long, and in many ways they hope that it's not too late when this improvement starts to be seen.
Well, Farai, let's talk a little bit about that new financial instrument introduced by Mnangagwa's administration. That's the RTGS dollars. Have we seen that move sort of addressing the cash shortages in the country as yet?
Well, Uche, I think the RTGS dollar was a result or the outcome of unpegging the bond note to the US dollar, allowing it to float freely and allowing people to trade in foreign currency on this interbank foreign exchange market, a formal market that would allow people requiring foreign currencies, businesses, companies, industries, instead of going to the parallel market, to go through a formal banking channel. But the reality is that the challenges still remain. Very few people, companies are able to access funding, to access foreign currency through the official market, and so there still remains a huge demand for US dollars and hard currencies on the parallel market. Because of that, that rate continues to run and rise, and that is having a bearing on inflation as well as confidence. And I think that is one of the key things that the finance minister will have to address: confidence, getting people to believe again that things will get better. Professor Mutuli Ncube again was upbeat that the disparity between the official interbank market and the parallel market will start to lower and narrow towards the latter part of this year. Measures that have been put in place to reduce money supply, fiscal consolidation measures amongst others, he believes that those will start to result in some dividends, where we will start to see these parallel market rates come down, more cash being made available. But again, these are things that people are waiting to see, and all are hinged on confidence. And so one measure that certainly needs to be improved is that confidence index, getting people to believe that these measures are well-meaning, that government will stick to its commitments and to its word, and will do what it's meant to do.
Quite right. Well, we'll certainly be watching that closely. Many thanks, Farai, for that update. Of course, that was Farai Mwakutuya joining us there in Harare, Zimbabwe. Well, let's move on now. The world's top platinum miners are bracing for tough wage negotiations with South African workers, as of course higher metal prices spur labor union demands. Now, talks over a new 3-year industry deal are expected to be tough. The unions have been emboldened by the price for platinum and, of course, its sister metals, which surged by 20% to 25% this year. The negotiations will pit South Africa's largest union in the platinum industry, AMCU, and 3 other labor unions against at least 7 producers, including Anglo-American Platinum and Sibanye Gold. Now, there are fears that the labor unions will go on strike. The miners and the unions are expected to start the preliminary negotiations later this month. And moving on, MTN in Nigeria has received approval to list on the premium board of the Nigerian Stock Exchange. The listing, which is set to proceed on Thursday, will be done by way of introduction. Now, this means that the shares of existing MTN Nigeria shareholders will be listed without an additional public sale of shares. The price has been set at about $0.25 per share. This was, of course, determined by referencing private share sale transactions by the network operators' shareholders over the past 180 business days. Now, MTN Nigeria's earnings in the first quarter ended March showed a 13.4% increase in service revenue, and the latest listing price gives the unit a market value of as much as $5 billion, making it the second biggest public firm in Nigeria. Well, let's delve further into MTN's planned listing with our correspondent Deji Badmus, who now joins us in Lagos. Deji, great to see you. Now, ahead of that listing, as we mentioned, MTN did release its 2019 first quarter results. EBITDA rose from about $402 million to almost $500 million. Service revenue, as we mentioned, up 13%. Now, despite these numbers and, of course, the fact that MTN does have the largest market share in the country, MTN is still facing issues with 3 major regulatory bodies in Nigeria. Give us a sense of the firm's investment case right now and certainly its growth prospects.
Well, Uche, I think the first thing to say is that those issues it is facing with the regulatory bodies are issues that MTN believes can be resolved. For instance, one of the issues is actually in court, and somehow MTN won the first round, and the belief is that they have a strong case, and so they are very confident that at the end of the day they'll be able to prevail. So, I mean, these issues are issues that will be resolved, and I think that's what investors will be looking at. And first is you just have to look at these first quarter results that MTN has released. No doubt a very positive one. You look at the fact that, no doubt at all, the bulk of his revenue still comes from, of course, voice. But then you look at data itself, the potential for growth is still there. The headroom for growth is actually large. So that's one area that I think MTN, that actually gives MTN now the leverage to expand. It's planning to embark on an expansion drive, and I think that's one area it will be targeting to grow revenue now in that area. I'm talking about data services. Of course, we saw a drop in digital services. That is something it will have to address. And don't also forget that MTN is actually planning to go into the mobile payment structure in this country. So when that comes on stream, of course, there's no doubt that it will increase the revenue portfolio of MTN. So you look at all those areas, and there's no doubt at all that MTN has got a very strong investment case. And these are some of the things that the investors will be looking out for. And that's why MTN, everyone believes, will attract huge investments. Uche?
Now, we'll talk a little bit about its expansion plans. But first, what does MTN's listing mean for Nigeria's stock exchange? Of course, given the fact that the Bourse did have one of the worst performances globally this year, we saw stocks down almost 10% so far this year.
It's pretty simple and straightforward, Uche. Let's talk about the market value as we speak. The Nigerian Bourse is estimated at about $32 billion. So you have MTN now that is worth $6 billion. That's what we've been told. So that alone will definitely increase the market size now of the Nigerian Stock Exchange, because you have a $6 billion company now coming in. And you also know that in terms of capital gains, a lot of people, analysts have predicted that in terms of capital gains, MTN is one company that will make a lot of gains. And so it means that investors would get a lot of dividends, and they'll have a reason to smile. And there's no question at all that this would deepen the market substantially. And MTN, as you know, is a very big player. So you have a very big player now coming into the market is what investors here have actually been clamoring for, and it's now happened. And so, the mere fact that a $6 billion company is coming into the market, it's something huge. It definitely would deepen the market, and absolutely no doubt. In terms of dividend payments, the investors, of course, you look at what the CEO of MTN said, by the next dividend payout they will be doing, I think that will be substantial. So investors will be looking at that. So it's good for the Nigerian Stock Exchange. It's something massive. It's something that the Nigerian Stock Exchange had always looked forward to. And now that it's happened, I think investors will just have to enjoy it.
Well, many thanks, Deji, for those insights. Of course, Deji Badmus joining us there in Lagos. And now let's take a look at our corporate headlines today. Jumia Kenya's Managing Director, Sam Chapet, says that the East African nation is one of the 3 countries where they'll be piloting the online retailer's third-party payment solution. Now, Jumia Pay, which is the service, aims to provide a more convenient payment method to its users. It was born out of a recent partnership with MasterCard, and it is currently live in Nigeria and Egypt. Meanwhile, American investment bank Goldman Sachs is seeking a banking license in South Africa as part of an expansion of its business in Africa's most industrial nation. The expansion will offer products including foreign exchange and government bonds. The Wall Street Bank is currently in the midst of a sweeping overhaul and a drive to win more clients to counter its falling revenue. And Kenya's biggest bank by assets, KCB Group, has injected an extra $8.9 million in its Tanzania and Rwanda units to boost its share capital. Now, according to the group's latest annual report, its Tanzanian subsidiary received around $5 million in the year ending December. This raised its cumulative investment in the unit, which turns 14 branches to about $35 million. And finally, Japanese automaker Nissan Motors has reported a 28% plunge in its annual operating profit, setting it up for the weakest earnings in 11 years. Now, the car maker attributed the decline to the arrest of its former chairman, Carlos Ghosn, after allegations of financial misconduct as well as troubles at its North American business. And that's a look at our corporate headlines. Well, we're heading into a short break now. Here's a look at what's still to come. State-owned enterprises in South Africa on the spot in a fresh government push against corruption. And Tunisia sets a 2021 deadline for banks to adopt the International Financial Reporting Standards.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Data out of the country. The country's foreign currency reserves.
With a dedicated and diverse team of anchors, CGTN now brings Africa to the palm of your hand.
I'm Penina Karibe in the heart of Nairobi, which is bustling.
From everyday heroes to the continent's most powerful figures, we bring their voices to you.
We haven't changed. And this is something most of us are very excited about.
We bring you news that's changing perspectives.
I'm Uche Okoronkwo reporting from Nairobi's City Center.
News that brings Africa to the world. CGTN. See the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back to Global Business Africa. Now, of course, state-owned enterprises have been in the spotlight in South Africa. The government is now grappling with what to do with these businesses and whether the state should be looking at an exit strategy. President Ramaphosa has targeted the state-owned entities for cleanup due to the huge amount of alleged corruption that's now beginning to emerge. Here's CGTN's Angelo Kobola with the details.
The CEOs of 3 South African state-owned entities don't have policy decision-making powers. They do, however, focus on operational matters.
I really think we've got to get over our inferiority complexes. As the government and as state-owned entities, we have the capacity, the intellect and the energy, and sure as nuts we have the reason to start building things ourselves with our own pools of expertise. And I think we spend far too much time consulting other people who are not on the field about how to play the game. And so we want to build up state expertise and not state expertise dependencies.
Some government businesses apparently escaped the corruption and fraud woes facing Transnet and Eskom and are in fact paying dividends to the shareholder.
Whilst the external world was pushing in terms of corruption, fraud, we were deep into looking at our standards. Making sure that we have the proper delegation of authority. Who must do what at the right time? Who must make a decision? What is the role of the board versus the executives and management? So we were busy tightening on those processes. And I must say that helped us because we were looking inward a lot. And whoever was coming to demand certain things, we're like, you know what? The governance control doesn't allow it.
SAA, on the other hand, has recently received another significant state bailout as the company struggles to become profitable. Its CEO says the playing fields should be leveled.
I have no protection. You open the sky, then you still restrict me with the PFMA. Yeah. That's what we need to understand, policy congruency. If we are going to get into an open space of open competition, which is the right thing to do, by the way, but you have to set your associates free in terms of decision making. You can't go through 3 or 4 levels of approval on something that is operationally needs to be done like tomorrow.
The South African government has around 750 different types of state-owned entities under its control, and it's got to make a decision quite soon about what to do with all of them. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
And moving on now, a Chinese firm has set up a $45 million plastic waste recycling company in Kenya that will collect and recycle about 2,000 tons of PET bottles every month. Now, Wico Recycling Company has set up operations in Athi River and Mombasa, and it targets to collect and recycle plastic bottles into pellets, which of course are later converted into fiber and garments. The firm has signed a partnership contract with the Kenya PET Recycling Company, which is an industry body mandated with the responsibility of regulating the management of post-consumer PET packaging in the country. The partnership is in line with Kenya's Vision 2030 objective by ridding the country of plastic waste and manufactured pollutants by 2020. Well, let's discuss the country's progress in the management of plastic pollution. We're joined by Joyce Gashugi. She's the country manager of the Kenya PET Recycling Company. Very welcome to the show, Joyce.
Thank you, Uche.
Well, we do know that Kenya is one of the few African countries that's actually actively managing plastic pollution. We had a plastic ban in 2017. Now, despite these numbers, 2018 numbers show that 5% or just 5% of the 20,000 tons of plastic waste generated in the country is collected and recycled. So what's your take on the progress so far? Is there significant improvement in plastic waste collection?
Okay. Thank you, Uche. Yeah. Yes, there is a lot of progress. I think since our inception as PETCO, Kenya PET Recycling Company, we are trading as PETCO in Kenya, in South Africa. We have seen a marked improvement. I think prior to us coming into market, we were recycling, as you said, 5%, about 850 tons a year. Today, we are able to recycle close to 2,000, and in this financial year, we're looking at recycling 6,000 tons. If you look at the partnerships we've already engaged in with Wico and with others, we are confident that we will be able to attain our target. Right. So there is a lot of progress.
Yes. Well, let's talk about how, because you do say that your targets are recycling 70% of the plastic waste generated by 2030. How do you plan to do this?
I know, I mean, everybody's asking the same question. I'm asking the same question. I would say that collective action and getting the job done. So how do we intend to get the job done is to engage stakeholders across the board. If you look at the entire PET value chain, from the collectors, the waste pickers at the dump sites, to those who are actually collecting bottles on the streets, right to the recyclers who we are signing contracts with, we are looking to engage at all levels, create consumer awareness, promote segregation at source, so that then we have more volumes of bottles getting to our recyclers, and to raise the level of consciousness among consumers to be able to not dispose their bottle as they are currently. Yes.
I said one of your key objectives is engaging stakeholders, and I'd like to know what that has been like for you. For example, we know there's been some opposition. The Kenya Association of Manufacturers, it opposed that ban in court. Of course, that wasn't successful. It also said as many as 100,000 jobs have been lost in the plastics industry. Also, we've seen the plastic industry in Kenya does import about 20,000 tons of PET products annually. It's projected to grow by 10% per year. So in the face of all of this, how are you planning to manage that challenge?
Well, I think, Uche, if we are honest and we look at where our government is actually taxing industry, you'll find it's in the food and beverage sector, which means this is a critical component to the economy. And so the question is, there's value in this sector for the government. And more importantly, if you look at the Big Four agenda that the government currently is trying to push and adopt, you find that recycling is actually one of the things that can actually grow the manufacturing sector. Globally, this is an industry that is able to employ over 100,000 plus people, create jobs in the informal sector, and create a decent work environment for people. So for us, we feel that, yes, Kenya Association of Manufacturers, ourselves, we face some opposition, but we feel that government has given us a space to be able to demonstrate what this model collection and recycling can actually do for the economy. Yes.
And you're actually cooperating with them now.
Yes, we are.
Aren't you? How are you?
So we actually, last year, actually more or less in November 2018, we signed a framework of cooperation with the Kenya Association of Manufacturers, and our regulator, the National Environment Management Authority, was actually present, as well as the Ministry of Environment and Forestry. And I think what that says is that all manufacturers are committed to seeing this model work. The reason being that I think more companies are beginning to understand that consumers are looking for sustainable brands. They want to be associated with sustainable brands, and they don't want to be buying products from companies that are not participating in regimes such as this. Yes.
Now, of course, recycling does cost money. So I'd like to know, how are you able to access the adequate funding to carry this on? And are you working together? Are you seeing corporates joining that cause?
Well, I would say yes, and I think one of the things that makes Kenya really a remarkable country, as you began by saying, there's a lot of action in the plastic space. One of the things we've been able to identify here is that corporates are coming. So we actually call them the coalition of the willing, because it's voluntary. It's not mandatory for you to be part of an extended producer responsibility such as ours. To date, we have about 16 members who control about 60% of the PET bottling sector. And so we are confident we can mobilize resources.
Right.
Yes.
Okay.
Yes.
Well, thank you so much for joining us in the studio, Joyce. Unfortunately, we have to leave it there.
No problem.
But of course, that was Joyce Gashugi. She's a country manager at the Kenya PET Recycling Company. Well, let's move on now. Tunisia's finance minister says the country's adoption of international financial reporting standards will take place gradually from 2021. Authorities there say this is a necessity dictated by the requirements of international markets. However, only a limited number of financial institutions in the country have already adopted the IFRS, and the related costs are certainly significant. Here's CGTN's Adnan Shaushi with a report.
The Tunisian National Accounting Council announced the adoption of international financing reporting standards by the country's financial sector in 2021. The financial sector is the one most ready today in Tunisia to be part of this transition, being the most advanced in terms of adopting prudential and accounting rules.
IFRS was created to establish a set of internationally recognized accounting standards to improve transparency, accountability, and efficiency of financial markets around the world. This is a necessity dictated by the requirements of international financial markets.
The head of the European Bank for Reconstruction and Development Office in Tunisia affirmed the EBRD's commitment to contribute to the effective implementation of IFRS in the country.
We will provide financial support to the Academy of Banks and Finance to provide IFRS certification training to some 100 accounting professionals in the banking and leasing sector in order to accompany the transition to IFRS.
The Tunisian Professional Association of Banks and Financial Institutions considered that IFRS adoption is a transition from a static system to a risk prediction system that allows banks to better anticipate their future.
This is not just a simple adjustment of accounting standards, but a tedious, long, complicated and costly process that should involve everyone. It is a challenge to the banking organization towards greater transparency and efficiency.
Economists believe that IFRS transition will generate opportunities in terms of integration into the global economy, attracting foreign investment flows, facilitating access to international financial markets, and strengthening investor and donor confidence. According to the finance minister, a draft law regulating the adoption of international financial reporting standards will be submitted to Parliament before the end of the current year. Experts say the adoption of IFRS from 2021 requires a coordinated effort by the private and public sectors. Adnan Shawishi, CGTN, Tunis.
And heading to Egypt now, the country has signed a deal with China to produce about 4,000 electric buses in the country over the next 4 years. Now, this is part of President Abdel Fattah el-Sisi's directives, which are aimed at creating an assembling hub in the North African nation. Here's CGTN's Yasser Hakim with the details.
It's the first of its kind in Egypt. China's Futon company is introducing electric buses in the North African nation. The 4,000 buses will be produced at Cairo's military production factories.
بعد تجارب الأتوبيس كانت حط في اسكندرية.
After a 3-month trial period for the electric bus in Alexandria city, it proved a success and the deal was signed for 4,000 buses. The Egyptian components will be about 45% of the bus. The first batch will be 200 buses with 185 seats each.
The deal is part of a plan to upgrade the public transportation sector in cooperation with China. An electric tram is already in operation and the high-speed train is under construction.
Reverting to electric vehicles in public transportation is very good. It reduces pollution and the expensive fuel and gas consumption. The public transport here needs a major overhaul because of problems in maintenance and because the number of vehicles does not cover the large number of passengers.
Officials say the electric buses will not only be produced for the Egyptian market, but will be exported to neighboring African countries. According to the contract, the second phase of the agreement will see China's Futon and Egypt's military production factories produce electric cars for the African market. Yas Hakim for CGTN, Cairo.
You're watching Global Business Africa. Let's take a quick break. Still to come. Germany returns to growth, but its economic outlook is threatened by the China-US trade tension. And Chinese tech giant set to launch a 5G in the UK.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is high risk.
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town. And I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Uche Okoronkwo, and I'm a business anchor and reporter at CGTN.
And here's a recap of today's headlines. The African Union says Sudan is making progress towards the much-needed political transition. Sudan's military council and civilian representatives have agreed to a 3-year transitional period before power is fully bestowed to civilians. Now, early on Wednesday, they announced a deal on the composition of a legislative council and the duration of the transition. But they also said they will continue talks on the key sticking points of the makeup of the sovereign ruling council. And a new report by Safeguarding Health in Conflict Coalition now says attacks on healthcare workers in conflict zones have risen marginally. According to the latest figures, the year 2018 saw 973 attacks on healthcare providers, in which 167 workers were killed in 23 countries. The biggest scare lies in the Democratic Republic of Congo, where the fight against the spread of Ebola has scaled down due to insecurity. And UN aid agencies have expressed their concern over the dramatically deteriorating humanitarian situation in Tripoli. They've stressed that more needs to be done to protect all non-combatants caught up in the battle for the Libyan capital. The weeks of fighting have killed more than 430 people and displaced more than 55,000. And finally, reports from Niger say at least 17 soldiers have been killed in an ambush near the border with Mali. 11 others are still missing. Now, according to the government spokesman, the attack happened near the town of Tongo. This is the same town where militants affiliated with ISIL killed 4 U.S. soldiers drawn from the 4 special forces. Of course, 4 other soldiers from Niger were also killed in the 2017 attack. And that's a recap of today's headlines. Now, on the international front, the German economy returned to growth in the first quarter, and that's thanks to strong household spending and construction activity. The country's Federal Statistics Office said that the German economy expanded 0.4% on a quarterly base. Economy Minister Peter Almay told Reuters the figures offered a first ray of hope following 2 quarters without expansion, but it was still too early to give the all clear. However, Altmaier was cautious on the outlook as renewed trade tensions between China and the U.S. could, of course, dampen that trend. Also, U.S. President Donald Trump may this week increase tariffs on European car imports, which will have a disproportionate impact on Germany. Meanwhile, fresh data shows that China's economy continued stable growth within a reasonable range for April. However, with official April figures in from the National Bureau of Statistics, some sectors still show signs of slowing down. Here's CGTN's Wang Mengzhe with more.
China's steady economic growth is once again evidenced by a stream of fresh April figures. The index of services production increased 7.4% year-on-year. The total value added for industrial enterprises grew 5.4%. Total retail sales of consumer goods also registered a 7.2% growth. And investment in fixed assets grew by 6.1%. However, some figures saw slight slowdowns compared to those in March. Industrial output growth dropped some 3 percentage points.
One important factor is the larger-scale value-added tax cuts implemented from April 1st. To better enjoy benefits of the latest cuts, manufacturers expedited their production and operating activities in March. If we look at the overall industrial output growth from January to April, it climbed 6.2%, higher than fourth quarter figures from last year.
This comes after better-than-expected economic growth in the first quarter of this year, as the world's second biggest economy reported a 6.4% GDP growth. Liu added, April's data shows the economy is actually becoming more vibrant, as the Chinese government is strengthening the efforts to rekindle domestic demand.
In innovation and entrepreneurship, we've witnessed over 18,000 newly registered businesses every day in the first 4 months of 2019. Meanwhile, private sector value reported a 9.1% growth for April. Also, both our March and April manufacturing PMI stayed within expansion ranges.
Another big concern here is whether the current escalation in China-US trade tension and additional tariffs could impact China's economic growth. Liu says the economy is now more capable of resisting external threats.
First, our economy has strong resilience after China's 40 years of reform and opening up, especially in terms of our industrial system, human resources, and infrastructure building. Secondly, our economy still has huge potential, particularly in its consumption market.
The spokesperson says economic vitality remains to be seen as entrepreneurship and consumption still have much potential due to the latest cuts in taxes and fees, among other supportive measures. Wang Mengzhen, CGTN, Beijing.
And in the meantime, numerous American economists and business owners think that imposing additional tariffs on Chinese imports will have a significantly negative effect on the U.S. economy. Here's more on that.
A report from the Oxford Economics Center says that imposing additional tariffs and expanding the trade war with China would cause a 0.3 percentage point drop in the U.S. GDP. The report also said that the trade war could lead to a loss of 900,000 jobs, while on average, every American household would pay an additional $700 in bills. The tariffs hurt the Heartland Trade Organization says the damage to the U.S. economy has so far totaled $26 billion since the trade friction began. A whiskey manufacturer in Cleveland, Ohio, spoke earlier of the impact of the trade war on his business.
And that has put a damper on our business considerably. I think we're impacted by 15 to 20% of our revenue has been cut off because of these tariffs. Well, it certainly limits the amount of investment we can afford to do in any given year. I mean, it's not just equipment that we plan to put in. We had hoped to move into a new building this year. That's probably going to be delayed a little bit. Certainly new hires. We probably would have 4 more people. We're a small company. We're only 15 people, but we'd probably be at about 19 or 20 right now if it weren't for the tariffs. Right now we're struggling with whether we can pass some costs on to our consumers, and I don't think we can. I think our margins are going to shrink. That reduces our profitability. It's going to make it a little harder for us to raise money for future funding rounds. And I think we have yet to see the full implications of what the tariffs will be.
Many economics point out that the key economic theory of comparative advantage is at play in a trade dispute. American students are taught a mathematics model that shows that imposing tariffs would damage both sides. The U.S. implementing additional tariffs on Chinese goods is aimed at threatening and intimidating China. But the economists say that action not only violates the common sense of economics, but also renounces the free trade rules that the U.S. has asked other countries to obey.
Tariffs and trade wars are so bad for the U.S. economy. The U.S. is a rich country precisely because it has such low tariffs. It takes in lots of the world's plenty, and it's trade with the rest of the world allows its people to specialize. So bad for the economy, and so there's naturally going to be cracks within the Republican Party that has historically been focused on economic growth.
The International Monetary Fund and the World Bank have called the expanding trade frictions the biggest uncertainties for the global economy. They're urging all countries to pursue multilateralism and keep the current trade system. 宋耀天 CGTN。
Meanwhile, tech giant Huawei is taking out its position in the UK market as it prepares to launch its first 5G phone on Thursday. Now, the move comes as the Chinese telecom firm deals with questions over whether it should be allowed to provide 5G technology in the UK following allegations of security concerns. From London, here's CGTN's Juliet Mann with the details.
5G is one of the biggest mobile trends for 2019. Carriers around the world are starting to roll out their next generation mobile networks with tech that promises more possibilities for smart homes, autonomous vehicles and more. And for phones, it means faster, steadier internet connections. But who's going to be allowed to build core parts of the network is a hot topic, because while Huawei's in the mix, there are security concerns about the company's alleged ties to China's government. The Chinese tech giant commissioned a report from independent organisation Oxford Economics, which showcases the prosperity side of the agenda. Look how much we bring to the UK economy in terms of growth and investment from China. The report claims Huawei directly contributed around $300 million to the UK economy in 2018 and now supports 26,000 jobs. But there are big concerns about surveillance and the security of customer data. That's why the United States is trying to get its allies to totally exclude Huawei from the 5G conversation. Now, although officially undecided, the UK seems keen to strike a Huawei deal. Intelligence agencies say any risks from Huawei can be contained by a special unit it has to monitor the company's software. And a leaked Security Council document indicated that Huawei was under consideration to provide some non-core parts of the network. Huawei will unveil its first commercial 5G phone at an event in London this week. Juliet Mann, CGTN, London.
Meanwhile, Egyptian President Abdel Fattah el-Sisi has inaugurated the country's biggest bridge project, the Taya Misr Bridge. The 600-kilometer road connects the east and west of the capital with the Cairo-Alexandria Desert Road, partly running over the River Nile. Now, the bridge is expected to reduce congestion on the capital's traffic-clogged streets. Here's CGTN's Adel El Maroui with more.
Egypt has inaugurated a new connector between the Red and the Mediterranean Seas. It's one of the biggest infrastructure projects the country has accomplished during the past 4 years.
We've challenged time in accomplishing these roads to extend development across our nation. It's a continuation in the state's comprehensive reform. These roads, axes, and bridges have been proudly built 100% by Egyptian hands to attract investments and create new urban communicates.
This iconic bridge has become the landmark of the $10 billion project, with around 1 million cubic meters of concrete, as well as 1,400 kilometers of steel wire for 160 suspension cables. It has become among the biggest construction achievements globally. This glass floor passage gave the bridge a usable extension, stretching its width to 67.3 meters, making it the widest cable-stayed bridge in the world. President el-Sisi has personally declared the bridge open for the public. At the ceremony, Guinness has officially enlisted Tahya Masr in its famous book of records.
The previous record was set in Canada, and the width of this bridge was 65.2 meters. Today, Arab contractors in Egypt managed to break that record and set a new achievement with a total width of 67.3 meters, a new Guinness World Records. If you look at the bridge, on each side you have 6 lanes with sidewalks for the passengers. So looking at all the documents we've seen, there's no waste of usage or space at all. It's all usable areas.
This suspended bridge is expected to lift much pressure off Cairo's traffic. It saves distance and time for commuters between the western and eastern outskirts of the Egyptian capital. Adel Mahroui, CGTN, Cairo.
And shifting focus now, here's a look at how commodities performed today. We saw oil prices falling after data showed a surprise rise in U.S. crude inventories today. Also, of course, the U.S.-China trade dispute continues to threaten oil demand going forward. However, tensions in the Middle East did help to cap those losses today. Meanwhile, gold prices steadying today, holding just below that key $1,300 per ounce level, as of course global stocks retreated today, pointing to reduced appetite for riskier assets, as of course investors await clarity on that US-China trade front. Well, let's take a quick break now. Here's a look at what's coming up. We take a look at a social enterprise making a difference in the lives of HIV orphans in South Africa's Alexandria Township.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN. See the difference.
Now, here's a story that will get you thinking about where you should be buying your next blanket or eco-friendly shopping bag next. One South African non-profit organization is providing vital resources for women and children in the country's Alexandria township. Under the Banner Blanket project, the group is making plastic-free shopping bags and blankets as a reusable and environmentally friendly alternative. Here's CGTN's Julie Shire with their story.
Widespread poverty and the scourge of HIV and AIDS has left grandmothers in Alexandra Township picking up the pieces.
Grandmothers or older carers were under looking after so many children, often because their children had died or their children are absent or their children are unemployed. And these grandmothers are relying on a pension and a social grant.
Jane Simmons started Banner Blankets in 2014 to help these women feed their families, many of whom volunteered for food at nearby AIDS orphanage Ratang Banner.
It was too difficult for me, because it helped me even if I've got the food parcel from Ratanbana. It was so little, but when I've done the blankets, it was very easy for me.
Demand for signature Chaka Chaka blankets were erratic, so Simmons expanded the project to include eco-friendly bags. A small percentage of the profits go back to the home.
It helped me to support my child, give my child the money to go to school. It's make me feel great because I learned a lot of things this year. To make a bag, to crochet, to make a blanket, and support other people about it.
It lifted me too much, because now I'm very, very proud, because when I'm doing this, I'm not doing this for me. Because remember, I like to help vulnerable children.
These children depend on Ratanbana for their survival. The money donated from the Blanket Project goes a long way in taking care of their everyday needs.
It's a very good project whereby unemployed women are now being employed by themselves. They are earning something, of which help me to offload the burden of women, men, children.
Banner Blankets helps around 30 women. But the non-profit organization will soon supply several Johannesburg malls with eco-friendly bags, which may lead to an increase in jobs. Julie Shara, CGTN, Johannesburg, South Africa.
Well, let's head to Tanzania now. The country has announced a new electronic auctioning system that will help allocate big game hunting blocks to tourism companies. Now, this is all in a bid to fight corruption in the country's hunting industry. The Tanzania Wildlife Management Authority will assign about 26 big game hunting blocks next month in an electronic auction. Of course, that will take place on the 10th of June. Here's CGTN's Daniel Kijo with more.
The initiative is being spearheaded by the state-run Tanzania Wildlife Management Authority and is expected to start mid-next month and run for 7 consecutive days. An official statement from TAWA has confirmed that currently there are about 26 vacant hunting blocks within game reserves, game-controlled areas, as well as open areas that are immediately available for auctioning. When developing its tourist hunting industry in the 1960s, Tanzania implemented the first block and quota system in Africa. It's known to have the widest range of game in the whole of Africa.
Like if you go to the west, they have specific species. If you go to the north, they have specific species. That's why I think that's what makes Tanzania unique. And the good thing is, in Tanzania, you get like mostly all the species somebody would actually want to hunt. That's why I think that's what makes Tanzania very unique in terms of hunting.
The existing system sold the blocks through tenders and allowed companies to own the blocks for up to 5 years. But now under the new system, eligible companies will be allocated a maximum of 5 hunting blocks for each of the different categories. Now, experts in the field say there might be a few challenges.
Some people might have the fear, okay, I've sold a Maasai Land Safari. Now, what if I do not get the block that I've sold the safari for? What am I going to do? And I've already confirmed the safari, the client has booked his travel, and I've already got some deposit. Now what's going to happen?
Hunting is part of the country's wildlife conservation strategy and a requirement for its long-term survival. So conservationists and hunters alike are keen to see how this system will work. Daniel Kijo, CGTN, Dar es Salaam, Tanzania.
Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and of course the rest of the team, thanks for watching.